I don't think that we're going to go back to that environment of low inflation.
The path back to 2% inflation while still sustaining a strong labor market, we believe we can do that. That is our aim.
If we see greater persistence of inflation, that's second round effects, then we will act more forcefully. It leaves options on the table, and that's very deliberate.
I think that there are forces that have been unleashed as a result of the pandemic, as a result of this massive geopolitical shock that we're facing now, that are going to change the picture and the landscape within which we operate.
This is Bloomberg Surveillance, Early Edition with Francine Lacqua.
Well, good morning, everyone, and welcome to Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London, and here's what's coming up on today's program. Price shock. French inflation hits a new record, piling more pressure on the ECB. Euro area CPI hits the wire tomorrow. Global central bank chiefs ramp up the fight against rising prices. We've got more from our keynote policy panel yesterday in Sintra. Plus, NATO members commit to a sevenfold increase in battle-ready troops, its biggest upgrade since the end of the Cold War. Now, let's check in on the markets. This is a picture across the board. We're seeing a bit of pressure at European stock 600. Now, there's also maybe a bit of position taking, or certainly a bit of a change, because it is the end of the quarter. So portfolios could be changing on the back of it. But you can see technology, one of the ones that are getting slammed the most. Basic resources also on the downside. There does seem to be a lot more focus on the markets about a possible recession. This is one of the things that we're watching out for. It could be on the back of central banks once again warning about inflation, but when I moderated the panel yesterday, I have to say they were pretty measured. When after the 90 minutes, I would say central bankers were pretty balanced. Yes, they worry about inflation. It could be persistent for longer, but there was certainly not a panic mood or nothing hugely new that we found out. So it's interesting, the anxiousness of the markets out there, and maybe anything that they say makes them worried about what's coming up. But Bitcoin, 19,398. There was a big, important report actually from JPMorgan on crypto. This is a picture across the board when it comes to Europe. Now, there is something that we need to watch out is Mr. Stoltenberg, of course, of NATO, talking at the moment, briefing reporters. We could also get President Biden in that speech or in that press conference shortly. That's happening in Madrid. And then across the board, it's really sector-based, the sell-off. So it's basic resources, some of the technology. So you're not seeing a huge difference between the FTSE MIB and the DAX or even the FTSE. They're between 1.6 and 1.9% lower. Now, stay tuned, because later this hour, we also have a conversation about inflation with the Bank of France Deputy Governor. She's Sylvie Goulard. And French inflation quickened to the fastest since the euro was introduced, raising pressure on the European Central Bank to do more to contain the shock for firms and households. Now, the key focus for the ECB president, Christine Lagarde, will be on the reading for the entire 19-member eurozone due tomorrow. Well, joining us now is Bloomberg's Western Europe economy team leader, Zoe Schneeweiss. Zoe, great to speak to you. Now, French inflation just hit a euro era high in June. Will this lead to a lot more pressure on the ECB to act firmly?
Yes, as you said, it just hit 6.5%. That's primarily due to energy and food. Now, the thing that we need to keep in mind here, compared to the other euro area countries, France really is doing incredibly well on inflation. They're best in class here. And that's because the French government has been so generous and has spent so much money, spent billions and billions of euros to keep this down. The French stats office says that inflation would be 1.5 percentage points higher if it weren't for these measures. And that really means that 6.5, while obviously painful, can't compare with the others. Now, with looking at the broader euro area, the ECB is under pressure to do something. They've announced that they're going to start hiking rates for the first time in more than a decade next month. 25 basis points is the base case here. However, earlier this week, several policymakers told my colleagues in Sintra that a 50 basis point hike could be on the table and should be something that at least should be considered. And given these numbers, and Spain yesterday at 10% really was a shocker, it is something that we expect to keep, at least to be talk about this in the weeks going up to the rate decision.
So European inflation, of course, expect to hit 8.5%. What are we looking at for in the Eurozone? I mean, what really worries central banks is de-anchoring expectations. And I don't know how you model that. Like, do they realize they've de-anchored when it's too late?
That is obviously a grave danger here. 8.5% probably won't be the highest, though we don't quite know when inflation will peak. That's primarily, though, due to energy. Now, and while it's spilling over into food, the worry is that it would also spill over into services. That is something we've had in the US. If you compare how US inflation is made up versus how euro area inflation is made up, the US situation is much more dangerous. Services there is a main driver, and that's because of the red-hot US job market. And services inflation isn't something that will fade again when prices fall. That's something where central banks actually have to do something. And that explains why we have these jumbo rate hikes out of the US, whereas the euro area really has been very slow about this and only will start next month, although really from the start of the year, we've had one record inflation rate reading after the other.
Thank you so much, Zoe. Bloomberg's Western Europe economy team leader, Zoe Schneeweiss. Now, joining us is Sarah Hewitt, head of research for Europe and Americas at Standard Chartered Bank. Sarah, always great to speak to you. I mean, I guess the concern is that the market wants to know so badly what central banks are thinking and are doing that they almost, price in everything before, the central banks are clear about what they're doing.
Yes, I mean, normally for central banks that's great because they let
the job for them.
do the job for them. But in this environment where there is so much uncertainty about how far rates are going to have to rise, about how high inflation is going to go, and now increasingly about recession risks, that I think everybody is pretty much in the dark. So we are seeing these sort of big swings in sentiment and markets from day to day.
Yeah, so how do you see inflation developing? I mean, there's a couple of things. Paul Krugman was saying that actually he thinks the ECB is perfect and shouldn't do anymore. And he also went as far as saying, as when you look at U.S. inflation, the number one risk to the economy is the Fed overdoing it. Do you think inflation can go down as quickly as it came?
I think that it can go down. I think maybe markets are becoming too nervous about the upside risks, and particularly about the how far inflation will endure. And
right.
Of course, that's the message that we're getting from central bankers, that inflation is set to stay high for a long time. They need to do something to tackle it. But if we look at what's driving inflation, it still is largely food and energy prices. And those prices, we think, will exert a negative drag on inflation certainly by later this year. In the US, we're seeing durable goods prices already falling. So I think you have to be quite careful about not overestimating how far inflation could rise.
But this is the problem, is that a lot of central banks are waiting for data, and I understand that, and I give them a lot of credit what they're doing, but it means that they can be significantly behind the curve because of how monetary policy works. There's always quite a big lag.
Absolutely, and they're having to estimate how far the jobs market is going to shore up inflation. So that's the real issue now. We see very strong jobs, very strong employment across Europe, across the US, and indeed globally. And this is leading to nervousness that wage inflation will start to pick up. That's the big no-no as far as central bankers are concerned. Once we start to see wage price spirals coming in, then it's very difficult to tackle inflation.
And does that come from literally everyone talking about the cost of living crisis? I mean, have we gone beyond that? Because I had my neighbor who's 80 asking me about the cost of living, and I know it's not a lead indicator, but that's all people are talking about.
Absolutely, and we're seeing real incomes being squeezed quite dramatically across the board. So naturally, those in work are looking for higher wages. So it's imperative that headline inflation does start to come down. And it may well be the case that we do get falling headline inflation before we start to see wages accelerating. That would be absolutely the nirvana for central banks.
Does the UK have it worse than everyone else because of also, domestic pressures, the labour market extremely tight, and a lot of staff after also having left the UK?
Yes, Andrew Bailey and indeed most of the central bankers yesterday at Sintra, of course, were talking about the supply side and how they'd misunderstood the supply side risks. But I think that's particularly pertinent in the UK, where on top of the pandemic, we have the Brexit impact as well. And we see that in wages picking up, but still, of course, very severe real wage contraction and increasing calls for strikes and indeed increasing strike action across the country.
Is there anything that the Bank of England can do now to nip that in the bud? Do they just have to be much more aggressive?
They may need to be more aggressive. They have to be cautious as well, of course, because we are starting to see some signs of a slowing economy. They've already acknowledged that they may need to bring about a small recession to get inflation back to target, but I think they would hope to avoid that.
Sarah, thank you so much. Sarah Hewitt, their head of research for Europe and Americas at Standard Chartered Bank, stays with us. Now let's get straight to the Bloomberg First Word News. Here's Leanne Gerrans. Hi, Leanne.
Hi, Francine. London Heathrow and Paris Charles de Gaulle airports are cutting more flights as Europe's travel chaos continues into the summer. Heathrow has asked airlines to cut 30 flights from their schedules amid concern that peak passenger numbers will exceed the level it can actually safely handle. France's Civil Aviation Authority has ordered a 17% reduction in flights out of the biggest Parisian airport due to a strike by firefighters. Now, the EU's chief Brexit negotiator says he won't contemplate a hard border on the island of Ireland. In an exclusive interview with Bloomberg, Maroš Šefčovič said the EU cannot accept Britain's plans to, quote, unilaterally and illegally amend the Northern Ireland Protocol. The UK introduced a bill into Parliament early this month to allow ministers to rip up parts of the agreed framework.
I would not even consider these possibilities because this is definitely not in the cards. We are very clear with that, with our Irish friends. I think that was a huge point of preoccupation in the United States. I mean, I had a lot of meetings with the senators and congressmen in the White House, and we, under no circumstances, should put the gains of the peace process under question marks.
And car makers increased their UK production for the first time in almost a year. Record petrol prices helped accelerate the shift to electric vehicles. Industry data showed output rose 13% in May, with EV output more than doubling. The number of cars produced was still only about half the pre-pandemic level for the month. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Leanne Gerrans. This is Bloomberg. Francine.
Leanne, thank you so much. I could talk to you for hours about my travails of trying to get back to London yesterday because of the carnage at Heathrow, but it's probably for another time, Leanne. But certainly something that will bring a lot of misery to a lot of the Brits traveling over the summer if it continues this way. Coming up, we talk global markets, inflation and risks with Sarah Hewitt. If you have any questions to any of our guests, please send them on IB Plus TV Go. This is Bloomberg.
I think we now understand better how little we understand about inflation.
That's not very reassuring.
No, honestly, this was unpredicted.
I think that there are forces that have been unleashed as a result of the pandemic, as a result of this massive geopolitical shock that we're facing now.
If we see greater persistence of inflation, that's second-round effects, then we will act more forcefully.
The path back to 2% inflation while still sustaining a strong labor market. We believe we can do that.
As the uncertainty will clear on various accounts, we will have to certainly be less gradual.
It's quite clear that as we respond to this shock, we want to have those options on the table.
I think that, the bigger mistake to make, let's put it that way, would be to fail to restore price stability.
Well, that was Fed Chair Jay Powell, ECB President Christine Lagarde, and BIS General Manager Augustin Carstens warning of a longer-lasting inflation at the ECB forum in Sintra. Now, still with us, Sarah Hewitt, head of research for Europe and Americas at Standard Chartered. First of all, Sarah, what's the probability in the U.S. of having a recession that's inadvertently engineered by central bank policy?
Well, our own models do suggest a 55% chance of recession in the next 12 months. So we've really tipped over from the the balance has tipped over into a greater likelihood of recession than not. And I think that this is most likely to be the result of tightening monetary policy. We're seeing some signs already, some warning signs, softer activity, tighter financing conditions, housing market, of course, struggling. And I think that what we're yet to see is a slowdown, a real slowdown in consumer spending. So let's see what the data say today.
But how did we get it so wrong in the US? Because, this feels like it has a lot more to do with stimulus, because they're not as, of course, they don't have that proximity that Europe has to Russia, and therefore the energy shock.
That's right. I think that it's really trying to address what has been a global surge in inflation and managing that in a way that doesn't cause a steep slowdown. Now, so far, so good, but I think the warning signs are there, and perhaps the Fed will have to pause before carrying on, perhaps as far as the market is expecting.
Sarah, are we underestimating the impact this has on emerging markets? Of course, if you look at emerging markets, I know they're not all created equal, it depends on structural reforms and things like that, but they have, of course, they could have a huge shock because of dollar strength.
Yes, and I mean, we've already seen some really dramatic impact, of course, across particular countries, Sri Lanka, but also across a number of African countries. And even those countries that you would expect would be doing well from high commodity prices are struggling because of the fiscal costs and because of outflows of funds. Where we have seen some positive developments is in Asia. We're seeing a lot of Asian economies emerging from the pandemic and really gearing up on activity. Inflation has not been such a big negative there so far, and of course the food crisis has been less impactful.
Sarah, overall, is there anything else that really worries you about how we're measuring things? So if we look at, the comings and goings of markets, and we discussed this a little bit at first, are we thinking that central banks can fix everything? We're in a higher rate inflation environment where they are not controlling the economy like they have in the past.
Yes, and of course they continue to stress that they cannot influence oil prices, they can't influence food prices when there is a supply side shock. But what they can influence are inflation expectations, and they've all acknowledged that what they're trying to do is rebalance demand and supply. Essentially, their job is to do the demand side, and that's what we're expecting, softer demand, which ultimately prevents inflation from spiraling higher.
Sarah, what's the biggest difficulty in modeling for you right now? If there's a gas embargo from Russia, how difficult is it to understand the second and third round effects, for example, of Germany having to shut down certain sectors?
A gas embargo, we're pretty clear, would be recessionary for not just for Germany, but also for Europe in general. I think that the difficulty comes in this constrained supply that is not a complete cut-off, and how far economies can adjust to that. Obviously, Europe has done a lot to try to wean itself off Russian energy, but for gas, it's impossible to fully be independent. And yes, a real weaponization of gas, as we're seeing at the moment, does carry some severe risks for the economic outlook.
Sarah, thank you so much for joining us today. Sarah Hewitt, there, Head of Research for Europe and Americas at Standard Chartered Bank. Now, coming up, European Commission Vice President and the EU's Chief Brexit Negotiator, Maros Sefcovic, on the Northern Ireland Protocol. That story's up next, and this is Bloomberg. Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now, we're looking, of course, at Madrid with the latest on NATO. President Biden has arrived. There was a brief press conference by the Secretary General of NATO, Mr. Stoltenberg. We'll see what the decision will be today on, of course, certain things. There it is. Mr. Stoltenberg still speaking. We could have comments from the President of the United States of America or not, but we'll keep on top of that. Any breaking news, we'll bring it to you. If the president starts speaking, we may also listen to what he has to say. Now, the EU's chief Brexit negotiator has told Bloomberg that the UK's plan to override the part of the Brexit deal governing trade in Northern Ireland won't work.
On the sides of the European Union, we are absolutely ready, despite of all the difficult issues which are currently on the table, and extremely intense work all of us in the European Union are doing to make sure that we will help and assist Ukrainians, and at the same time we will deal with all the consequences the war has on energy security, on food security in Africa, and all the problems linked with that. So despite of all that, as I said, doors is open. We are ready to talk, but we need the acknowledgement that what needs to be done would be a genuine negotiations. That it shouldn't be some kind of window dressing. Okay, we've met, we took the picture, we negotiated, but there could be only one outcome of this negotiation, and this is what is written in the bill. Because you are not going to negotiate when you have a gun on the table, or when you have, I would say, very clear results, what you want to achieve, and therefore I'm appealing again. Let's come back to the table. Let's work on genuine joint solutions, which would be within the agreements we sign. And I can assure everyone and give you my word that from our side, we will be looking for smooth operation of the protocol, for looking for the ways of using maximum flexibility, because we just want this to work. We want to bring the best possible results for the people in Northern Ireland and move to the next, I hope, brighter stage of our EU-UK relationship.
Well, that was European Commission Vice President Maros Sefcovic. Plenty more, of course, on the markets and on politics. This is Bloomberg. Price shock. French inflation hits a new record, piling more pressure on the ECB. Euro area CPI hits the wire tomorrow. Global central bank chiefs ramp up the fight against rising prices. We have more from our keynote policy panel yesterday in Sintra. Plus, NATO members commit to a 7-fold increase in battle-ready troops, its biggest upgrade since the end of the Cold War. Well, good morning, everyone, and welcome to Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now, later this hour, we have a conversation with the Bank of France Deputy Governor, Sylvie Goulard. So send in your questions, of course, for the Deputy Governor through IB plus TV Go. Now, the ECB's forum in Sintra, over for another year. One of the key takeaways was that some of the world's most important central bank chiefs are warning of a shift to a world with persistently higher inflation. Now, this is causing many to have to tear up their playbooks of the last 20 years, including how to tackle problems around economic growth.
The U.S. economy is actually in pretty strong shape. So if you look back a year, the U.S. economy grew more than 5.5%.
We also have this recovery that is very much underway. That is certainly driven by services because of the swing that we've observed from goods.
When I look at the UK economy at the moment, it's very clear that the economy is now starting to slow. We are at something of a turning point in that respect.
The labor market is tremendously strong, still averaging very, very high job growth per month.
We have very low unemployment numbers, high employment participation.
So overall, the U.S. economy is well positioned to withstand tighter monetary policy, we think. Is there a risk that we would go too far? Certainly there's a risk. But I wouldn't agree that it's the biggest risk to the economy.
Now, for more, we're joined by Bloomberg economist Jamie Ross. So, Jamie, have we actually reached peak inflation in Europe?
No, I don't think we have. I think we've probably got another couple of months. I'm expecting that inflation is going to hit 8.8% in August, teeing up a challenging September meeting for the ECB. And inflation generally is going to overshoot the ECB's forecast in the near term.
Jamie, what were your key takeaways from the discussions? I mean, I had a feeling, first of all, it was extremely difficult for them to commit to anything. I think they didn't want to, upset the status quo. They didn't really want to, move anything or signify everything to the markets. But they did sound, a lot more hawkish maybe than we would have thought a couple of weeks ago.
Yeah, I think that's exactly right. And when you were there, and it was a great interview. But they did sound more hawkish. I think there was a kind of there's more acceptance that what's happening may cause recessions, and a willingness to accept that could be the consequence, which is a slight change in language, certainly from Powell. And the other thing that surprised me was just the acceptance that Lagarde had of the changing environment for inflation. If inflationary pressure is going to be higher forever, interest rates are going to have to be higher forever as well. And this, of course, is going to cause a lot of problems for the ECB and for the periphery in Europe.
Does the ECB have to backstop Italy's debt in order to keep the euro area, intact and control inflation? And again, it's almost a political decision. So how do they get around that, Jamie?
Totally. I think it's, someone has to backstop Italy's debt if the euro is going to thrive. Whether that's the ECB or whether that's a fiscal solution, we're going to find out over the coming couple of years, I should think. For the ECB, it's a really difficult thing to craft a tool that will actually have enough clout to soothe markets because of exactly that political question. Ultimately, this is a fiscal issue. It needs to be dealt with a fiscal solution, and the ECB is kind of marching in trying to provide a stopgap.
Jamie, thanks so much. Jamie Rush there with the very latest, of course, on what ECB and the Fed and everyone else can or cannot do. Now let's get straight to the Bloomberg First Word News. Here's Leanne Gerrans. Hi, Leanne.
Hi, Francine. London Heathrow and Paris Charles de Gaulle airports are cutting more flights as Europe's travel chaos continues into the summer. Heathrow has asked airlines to cut 30 flights from their schedules amid concern that peak passenger numbers will exceed the level it can handle safely. France's Civil Aviation Authority has ordered a 17% reduction in flights out of the biggest Parisian airport due to a strike by firefighters. Now, China's economy showed further signs of improvement in June with a strong pickup in services and construction as COVID outbreaks and restrictions were gradually eased. The official non-manufacturing PMI climbed to 54.7, the highest in more than a year and well above the consensus forecast of 50.5. The manufacturing gauge rose to expansion territory. And the EU's chief Brexit negotiator says he won't contemplate a hard border on the island of Ireland. In an exclusive interview with Bloomberg, Maroš Šefčovič said the EU can't accept Britain's plans to, quote, unilaterally and illegally amend the Northern Ireland Protocol. The UK introduced a bill into Parliament earlier this month to allow ministers to rip out part of the agreed framework. And car makers increased their UK production for the first time in almost a year as record petrol prices helped accelerate the shift to electric vehicles. Industry data showed output rose 13% in May, with EV output more than doubling. The number of cars produced was still only about half that of pre-pandemic levels for the month. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Leanne Gerrans. This is Bloomberg. Great to have you back in London, Francine.
It's nice to be back, Leanne, despite all the trials and tribulations actually getting through London. But that's a story for another day, the carnage that is Heathrow at the moment. Now, U.S. National Security Council Coordinator John Kirby says there's no reason that the Russian President Vladimir Putin should view the bolstering of forces in NATO's eastern flank as a provocation. Now, here's more of what he told Bloomberg's Anne-Marie Hordern in Madrid.
There's no reason that Mr. Putin needs to view any force posture changes on NATO's eastern flank as a provocation. NATO is, will be, always has been a defensive alliance. The reason we have to do this is because Mr. Putin has been the destabilizing influence on the continent. Mr. Putin decided to invade a sovereign neighboring state. Mr. Putin is the one who is the aggressor.
Now, joining us from the final day of the summit is Bloomberg's Maria Tadeo with some great reporting on the ground. Maria, first of all, NATO definitely singles out Russia and China. How's the alliance shifting its strategy for the future?
Yeah, absolutely, Francine. And some of the language there is really striking in the document that allies approved yesterday. Of course, that sets the agenda for the next 10 years, the big priorities for NATO. And I want to read you some of the language around Russia, because this is really very striking. Of course, allies say that Russia is the most direct and significant threat, but they also say when you look at the Russian Federation, it is trying to reestablish spheres of influence, direct control by subversion, aggression, and annexation, clearly a reference to Ukraine. The message yesterday, particularly for the European nations, says, what a reality check. Do not take your security for granted. Invest in it and we'll stay together. When it comes to China, it did feature too in the conclusions. The language, of course, arguably is not as aggressive as it is on Russia, but it did say that China is a challenge for the future. It pointed, of course, to the major spending that is going on infrastructure infrastructure and military spending. That could be a sign of intimidation for neighbors. And then once again, NATO reiterating that it is disappointed by the fact that China has not condemned the war in Ukraine. And the real concern, Francine, behind the scenes, and this is really the talk among officials, is that concern they have that Russia could potentially at one point ask China for help financially, also militarily, and the Chinese could agree to it.
But how, Maria, does that strategy get tested in Ukraine?
And Francine, that is really the bottom line. You know, this is great on paper, but Ukraine will really put that resolve to the test. Yesterday, NATO repeated, we're in it for the long run. We will help Ukraine win the war for as long as it takes. That really doubles down on the match, or the words from the G7. And again, President Zelensky yesterday said, okay, if Russia is the biggest threat, then help us because we're the #1 target. But Francine, there are concerns about the public opinion, particularly as we enter the winter and we see the economic fallout of this, and they worry that perhaps some of the public opinion, which until now has really helped Ukraine, that may start to change as a result of the repercussions of it. For the time being, on paper, the NATO alliance says we're going to continue to help Ukraine. They have to win the war. The repercussions of Ukraine being defeated could be enormous, particularly for Eastern Europe.
Maria, thank you so much. Maria Tadeo there with some great reporting for us on the ground at the NATO summit in Madrid. Coming up, French inflation hit a record high, pressure ramping up on President Macron. We'll be speaking with the Deputy Governor of the Banque de France, Sylvie Goulard. That's coming up next, and this is Bloomberg. Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now, French inflation has quickened to the fastest pace since the euro was introduced. CPI hit 6.5% in the year to June. Energy and food prices drove the reading higher, ramping up the political pressure on President Emmanuel Macron, while also potentially contributing to calls for tighter monetary policy. Now, we also have, of course, this report assessment of risks to the to the French financial system. This just came out this morning by the Banque de France. In it, of course, they talk about cross-cutting analysis of vulnerabilities, cyber risks, what it means for the real economy, and they also touch on risks to commodity markets. Well, joining us now is Sylvie Goulard, Deputy Governor of the Banque de France. Thank you so much for joining us, Madame Goulard, on this very important day when you look at some of the risks to the French economy. First of all, on your report, you talk about debt, and this is something that could possibly get worse as we deal with these energy swings and, of course, also inflation going higher. What's your main concern for the French economy right now?
Well, thank you for giving me the floor. Actually, it is a report of the financial risk, and we do this report every 6 months. So it's the picture where we are now, and just as a reminder, in January, we were before the war, and we could not predict what happened. Inflation is very high. Maybe the French don't realize that it was less high in France than in other countries of the euro area and other countries in the world. So the central bank on the monetary side is going to act according to the mandate to preserve price stability. What we are looking at now is the impact, for example, on the banks. There are negative elements, but there are also positive elements in terms of margins for interest rates, as the French deposits are not rewarded in any way. So we are looking at all these elements, and our message now is so far so good. We all know that the amount of public debt and private debt of the non-financial companies is quite high in France, compared once again to the major economies. So we look at it carefully.
I mean, if you look at the risks of the French financial system, first of all, I have to applaud you because you have a wonderful chart laying out very, very simply, easy to understand, and other complex issues. You basically point to 3 cyclical concerns, and this is, market risks, it's stressed rebalancing conditions, and also pressures on profitability of financial firms. And then you talk about the more structural aspects, right, which is basically cyber threats and climate change. How much do you worry about some of these market dislocations?
Well, at this stage, there is no dislocation. Once again, we consider that the risks are high. The risk links to the macroeconomic downturn are high. the stress refinancing conditions are there, and we look at the scenarios we have ourselves published recently in the worst case scenario, of course, with the kind of embargo of energy, etc. We all know that in this case, the prices will go even higher than they are right now. And on energy, central banks are not at the forefront. And on the pressures on the profitability, as I said, there are pluses and minuses. For insurance companies on life insurance, you have to look at it carefully. For the banks, it's a little bit differentiated. But all the efforts we made since the great financial crisis to increase the resilience of our banks and our institutions are now having an effect. We have banks that are well capitalized, and we are not worried on this front.
How should investors look at the high amount of government debt? When does this start being a concern, especially if we need to see further spending, actually, from the government to face all of the uncertainties in the next 6 months?
You know, I'm not a member of the government, and Bruno Le Maire himself said on Monday that the situation was serious. So if I may, it's the duty of the government. Now, we have two sorts of debts. The COVID debt was necessary and was a reaction to an emergency situation. The important thing is to go back to levels of debt that are sustainable, not just to please Brussels or to meet criteria, but because it's in the interest of the country. And I'm confident that this government that is insisting a lot on the French sovereignty will do what is necessary to keep it under control.
Yeah. How should we look at risks emanating from crypto, digital currencies?
Well, this is very interesting. What we experienced in the last months is a real stress test, if I may say so, of what cryptos are. And I recommend investors to be careful. It's a less regulated field. We are used to be quite protected in our markets. The crypto world is less backed by regulation and supervision. So what we observed is, to a certain extent, something that has to do with the very speculative nature of crypto. So we are looking at it. We need, of course, global regulation. The FSB is working on that. But we are by far not where we should be in terms of regulation. So to all investors, be careful.
And how do you view, for example, markets in this post-Brexit world?
Well, I wish we would be really post-Brexit. We had an agreement. The agreement was signed and ratified, and the only thing I can say as a central banker is that I'm confident that people are going to respect the rules they have themselves negotiated. What is sure is that, and we observe this in the war, we need to have a strong system if we are under attack from countries that would not dislike to play with all the divergences we have between us. So we should really hurry up. For the rest, we supervise the institutions based in Paris. We have the European rules. The passporting is always possible from one EU country to another one. And we are on the side of the Irish people to defend the Good Friday's agreement. Because stability is part of prosperity.
Thank you so much for joining us today. Sylvie Goulard, the Deputy Governor of the Banque de France, of course, on this very important stability report for the financial markets. Now, we're also getting some breaking news out of Russia, and this is according to IFX. This is a Russian news agency saying that Russia has been withdrawing troops to facilitate grain exports. And this is something, a piece of news that would be huge, of course, for global wheat prices. It's something that a lot of market participants, also just a lot of citizens of the world, had been hoping this would happen, just because of the amount of wheat and grains that's been sitting in parts of the sea that haven't been able to shift. Russia has said that they will withdraw some Black Sea troops to help the grain exports, and on the back of it, we've seen some wheat swings. Chicago wheat has been swinging as Russia says it has withdrawn some troops. You can see the wheat there priced in the U.S. Now let's get straight to Bloomberg Business Flash. Here's Leanne Gerrans. Hi, Leanne.
Hi, Francine. One of Europe's biggest automakers says the car market could collapse if electric vehicles don't get cheaper. Stellantis was responding to a landmark EU deal to phase out internal combustion engines by 2035. The maker of Jeep, Fiat and Peugeot cars say unless the cost of making EVs is cut by 40%, demand will be crushed. Now, Grayscale says it's suing the U.S. Securities and Exchange Commission after its application to convert its Bitcoin trust into an ETF was rejected. In a meeting with the SEC last month, Grayscale argued the plan would unlock as much as $8 billion in value for investors. The regulator found the proposal didn't do enough to prevent fraud and manipulation. And Google has been attacked by European consumer groups who accuse it of putting users on a fast track to surveillance when they sign up to an account. Consumer organisation BEUC says the company may be violating privacy laws by steering people to an intrusive system where everything they do is monitored and exploited. Google says the option it now presents are clearly labelled and designed to be simple and understandable. And that's your Bloomberg Business Flash. Francine.
Leanne, thank you so much. Coming up, the White House looks to OPEC for a further boost in oil production ahead of the cartel supply meeting today. We'll discuss that next, and this is Bloomberg.
I think that the first step of them announcing additional supplies a few weeks ago was step one. I'm very hopeful that you and I can have this conversation about step two sometime in the near future.
Well, that was senior White House energy advisor Amos Hochstein speaking ahead of the OPEC Plus meeting today, and the outlook for oil may ultimately hinge on President Biden's trip to Saudi Arabia next month, when he's expected to look for help in bringing down prices. Now let's bring in Bloomberg's energy markets reporter Anthony DePaula. Anthony, great to have you on the program today. So what are we actually expecting from OPEC?
Good morning. Yeah, today will be a rollover of the decision they took last month. We're talking about August production. They're going to bring some production back, about 600 plus thousand barrels a day. That's going to be a rollover of that decision that they already took for these 2 months, July and August, and that will exhaust the production cuts that OPEC Plus had put in for the coronavirus. So once they finish those cuts in August, then from September through the end of the year, that's really what we're looking for to see where additional production is going to come after that, Francine.
So what exactly does it mean? You know, first of all, who has the firepower to pump more oil? And what are we expecting from President Biden's upcoming trip in Riyadh?
Yeah, and in fact, that trip is the main point, the main thing where we're going to see kind of this inflection point in terms of production. We won't hear much about it today. They'll save the real news for then when they do reach a deal. If Saudi Arabia and UAE, these are the two countries that have the spare capacity, if those are the ones that go ahead and do decide to increase production, the Saudis may be reticent to do that. There are some doubts in the market as to whether they have that spare capacity. If they do have it, the Saudis tend to want to keep it in case they need it, to bring more oil production on in case there's an emergency or some kind of need in the market. So they like to keep that role as the central bank or the swing producer of oil. If they've used all their spare capacity, they kind of exhaust that role. The UAE's got some production, and they're really eager to bring that to market and make some money for all the investments that they've been doing, Francine.
Anthony, thanks so much, as always. Bloomberg's energy markets reporter there, Anthony DePaula. Now, in the meantime, we also look at the markets. It is the last trading day of the quarter, so we could see readjustment of that. But much more, it's also a concern about possible recession. Bloomberg Surveillance early edition continues in the next hour. Matt Miller, Kailey Leinz in New York, and Edwards here in London. And this is Bloomberg.
Fighting inflation and winning this battle is the single most important thing facing central banks.
Even if we have recession fears, the central banks are in a very, very tricky spot.
We think there's a high risk of recession, particularly if the Fed goes really hard and fast the way they're talking about.
Even if we get a recession, it's going to be, or it's likely to be, short-lived and not as big as we think.
This isn't a market unlike we've ever seen before. And I think that these growing pains and this volatility really does create opportunity.
This is Bloomberg Surveillance, Early Edition, with Anna Edwards, Matt Miller, and Kailey Leinz.
Good morning. It's 10 a.m. in London, 5 a.m. here in New York, and 5 p.m. in Hong Kong. Welcome to Bloomberg Surveillance Early Edition. I'm Matt Miller with Kailey Leinz in New York City. Anna Edwards with us out of London. Our top stories today. The first half of the year is ending with European stocks and U.S. futures down. Central bankers around the world are again warning inflation is here to stay, and they're going to do something about it. China's Xi Jinping returns to Hong Kong and declares the city has been reborn from the ashes. It's an apparent reference to the sweeping security law that crushed dissent there, and it's one of the biggest changes to NATO's defense planning in decades. The alliance will boost the size of its high readiness force almost sevenfold as it keeps an eye on Russia. So we do have futures down on concerns central banks are going to worry about inflation much more than they're concerned about a recession. Kailey Leinz has a look at the markets in Asia. Kailey, what do you see?
Well, broadly, it definitely was a down day to end the month of June, end the second quarter, and end the first half of the year in Asia. You had Japan, South Korea, Hong Kong lower, so the MSCI Asia Pacific Index as a whole was down on the day. However, the one exception to that was actually China, where the CSI 300 was higher by more than 1%. We got PMI data out overnight that was north of 50 for both the manufacturing and non-manufacturing gauges. So back in expansion territory for the first time since February. Services especially strong as the economy reopened from some of those pandemic restrictions. You're starting to see the rebound. However, when you look across other asset classes, while equities were down, bid into safe havens, the typical kind of risk-off sentiment. We saw yields coming in places like Australia and New Zealand, and the Japanese yen, which of course has been weaker as of late, is actually strengthening against the dollar today in a bid for safety, Anna.
Yeah, absolutely. We're seeing that same safety bid taking place here in Europe then, Kailey. Let's start with European stocks, though, and this is the red picture we have for you, almost red everywhere across the European continent, as we factor in ongoing concerns, greater concerns about recession and where the European economy goes. And as Matt was referencing in the headlines there, European stocks are set for their worst half year since 2008. Such are the losses that we've seen for European stocks since the start of 2022. Let me show you some assets in focus, and to Kailey's point about money going into fixed income, we're seeing that in Europe. I've selected the French 5-year yield, but we could have selected all kinds of assets here. They're buying bonds, yields coming down, and all of that, recession fears are to the fore, it seems, driving that. And despite the fact that we've seen inflation data out of France taking another leg up, but coming in line with expectations. German utility Uniper in focus today. This is, as I say, a German utility, and they are in discussions with the German government about a possible bailout of the business. All this connected to the rising price and the tighter control of Russian gas flowing from Russia into Europe. And I'm also keeping an eye on the iTraxx crossover index. This is a measure of the cost of insuring against default for European corporates, and it is rising. It is rising to levels that we have not seen, Matt, since the early days of the pandemic, over 600 basis points, and that has European corporate default in focus.
All right, well, we are looking at futures that are down here right now, more than 1% to end the month, the quarter, and the half. I heard Carolyn Hepker on Bloomberg Radio today say this has been the worst quarter for the 60-40 portfolio since 1988. So it didn't help if you held bonds. Right now, we do see investors buying 10-year debt. 3.0593 is the level there. So coming down a little bit, but still solidly above 3%. And I think the story about central banks yesterday was a requiem for inflation. I've got to remember to look up requiem later, but the idea is that all the central bank leaders from Europe, from the UK, and from the US are saying they're going to put inflation-fighting measures first and worry about a recession second. That's part of the concern, bringing down futures and bringing down interest rates right now. Crude coming down just a little bit, 109.68. So we're still looking at basically 110 $210 a barrel for Texas Intermediate, and this has been a horrible month for the first down month, actually, for crude since November. So it's been a long run of monthly gains for crude. We're going to have an OPEC meeting today. Don't expect any surprises there. And then Bitcoin right now down 5% from midnight. $19,183 is where Bitcoin is priced now. And the losses for this quarter have been around 58%, I believe, for Bitcoin. So a horrible quarter. In fact, the worst since the third quarter of 2011, when Bitcoin fell from $16 to $5. That puts in perspective what 19,170 looks like. So, Kailey, we have seen a big drawdown's a word I've been reading a lot lately. I think drawdown is the new word for the quarter. It's the new word for losses, although I'm not sure everyone's using it correctly.
Yeah, well, there's a lot of synonyms you can use. The point of the story is for a lot of assets, Matt, it has been a brutal second quarter and, frankly, a brutal first half of the year. Now, we are almost to the second half, but not quite. We have to get through today first, and there is a lot going on in the day ahead, including Chinese President Xi Jinping leaving mainland China after nearly 900 days at home. He's visiting Hong Kong for events marking 25 years of Chinese rule in the former British colony. We also have the OPEC Plus alliance set for an easy meeting as it cruises to the conclusion of a two-year pact on oil supply constraints. And finally, President Joe Biden will be holding a press conference at the NATO meeting in Madrid, but that's happening at 8 a.m. New York time, Matt.
All right, let's get to that China story because Xi Jinping is making his first trip outside the mainland in 893 days. Xi traveled to Hong Kong, calling the city reborn since he last visited 5 years ago. Let's get more with Enda Curran, our chief Asia economics correspondent. Enda?
Brief remarks on arrival by President Xi. Like I mentioned, he said Hong Kong has been reborn from the ashes. He spoke about vigor and vitality. And he also talked up this idea of one country, two systems, the idea being that Hong Kong is meant to have some autonomy from Beijing itself. We don't have specifics on his itinerary from here. He did arrive with his wife, who was met by local officials at a train station here in Hong Kong. When he did arrive, also some school children waving flags. We may get more of a substantive speech from him tomorrow when the new chief executive is sworn in.
Well, and of course, Xi Jinping may be going into this trip in a bit of a better mood, considering the economic data we got out of China overnight and looked a lot better.
PMI is back in positive territory, above 50. In fact, the services side of the PMI is at a one-year high, suggesting that areas like logistics, eating out, catering may be getting off the ground again. It does speak to the idea that the economy is stabilizing. But let's not forget the remarks by President Xi himself before he came to Hong Kong. They are sticking with COVID zero. Obviously, there's a public health dividend with that, but a lot of economists will say that will mean economic pain going forward. So this PMIs today does reinforce recovery is underway, but nobody's calling it a V-shaped rebound for China.
Enda, thanks very much. Bloomberg's Enda Curran with the latest on the growth story and indeed the travels of the leadership there in Hong Kong. Now, yesterday, Francine Lacqua sat down with the world's most influential central bankers, Christine Lagarde, Jerome Powell, Andrew Bailey, and the BIS General Manager, Augustin Carstens, at the ECB Forum in Sintra, Portugal. Here are some of the highlights.
The path back to 2% inflation while still sustaining a strong labor market. We believe we can do that. That is our aim. The bigger mistake to make, let's put it that way, would be to fail to restore price stability.
If we see greater persistence of inflation, that's second-round effects, then we will act more forcefully. As we respond to this shock, we want to have those options on the table.
I don't think that we're going to go back to that environment of low inflation. As the uncertainty will clear on various accounts, we will have to certainly be less gradual.
Francine Lacqua is not in Portugal anymore. She's back here in London and she joins me on set. Good morning to you, Francine. An incredible lineup for your panel to talk about global central banking and how global central bankers respond to the challenges and what they've learned about inflation.
Yeah, and I think they tried as much as possible not to give any guidance to the market. So I think they probably consider a success that they didn't really move markets. But we looked at longer term and the fact that this could be a real regime shift for inflation in the next 10 years. Now, what this means is that they are probably willing to risk the economy just to deal with inflation. I mean, look, the one thing that kept on coming up in the debate is de-anchoring of inflation expectations. Now, the real quickest way to get that is if people continue asking for price rises or wage rises, and that would be directly linked to, of course, some of the things that we talk about in the media, the cost of living. And so there seems to be a lot of worry, especially from the Fed. I mean, he said something like, the clock is ticking, that they want to be aggressive, they want to do it now, and then see what happens if inflation were to go back down. And I have to say, I wasn't reassured by the fact they said, look, they just got inflation completely wrong.
Yeah, they've certainly got a better handle on what they don't know about inflation, I think was one of the lines. Francine, thank you so much for bringing us the highlights. Francine Lacqua with the latest from Sintra. Over to Madrid now for our coverage of the NATO meeting, which of course is underway. Our Washington correspondent, Anne-Marie Horden, joins us. Our European correspondent, Maria Tadeo, also present at the meeting. Let's start with you, Anne-Marie. Anne-Marie, Interfax has reported that Russia says it withdrew some Black Sea troops to help grain exports. I saw an earlier line coming out of the TASS news agency saying about enabling 7 tons of grain to leave a port in southern Ukraine. What's the latest here? What can you tell us?
Well, I think we also need to make sure we remember that what Russia says and does is usually very different. What the Ukrainian army is saying that Russia is leaving that island because they have had come under shelling from the Ukrainian military. But what we do know is that there is widespread reporting that Russia is actually stealing Ukrainian grain, taking it to the Black Sea and shipping it off to what Russia deems, quote, friendly countries, using these sky-high prices due to Russia's invasions of Ukraine, which, of course, Ukraine is considered the breadbasket, especially for European buyers, and selling that as their own. This has been a hot topic, not just here at NATO, but also at the G7 summit in the Bavarian Alps, because, of course, it is exacerbating this war in Ukraine, the prices of what we are seeing in grain. And I spoke to the National Security Council's John Kirby yesterday, and what the Admiral said to me is to get grain out by the Black Sea is going to take a very long time. They've been able to get some Ukrainian grain out via rail, but to get that Black Sea out and have Ukraine go back to shipping via seaborne is going to be incredibly difficult because Russia really controls that area.
All right, Anne-Marie, thanks very much. Bloomberg's Anne-Marie Horden there in Madrid. She'll be back later this hour with an interview with the Spanish foreign minister. Now, NATO has agreed to the biggest upgrade of its military presence in Europe since the end of the Cold War, putting 300,000 troops on high alert while beefing up European defenses. Let's get more at Bloomberg's Maria Tadeo. Maria, NATO singling out Russia and China as well. How is the alliance shifting from defense to offense?
Well, what a change. NATO still says we're a defensive alliance. We will never attack anyone, but we have to be ready to be attacked. And the NATO Secretary General yesterday, Mr. Stoltenberg, he did say the world, the global context, it is becoming more competitive and it is a dangerous place. Now, special mention to Russia. They do say, and I want to read you some of the language here because it is incredibly striking. If you think back 10 years ago, Russia was not a member of NATO, but it was seen as a working partner. NATO now says the Russian Federation is the most significant and direct threat to security. It is trying to reassert sphere of influence and control by aggression and annexation. Clearly a reference to the war in Ukraine. So the message was very clear. Spend in your own security. What a reality check to European countries. Do not take it for granted. The other country that was mentioned, perhaps not as aggressively, but it did feature in the conclusions, was China. They do recognize that the Chinese are spending so much on military infrastructure. That could be a problem for neighbors who may feel intimidated. And the real question, Matt, behind the scenes from officials is that concern that Russia could turn to China for financial and military help in the war in Ukraine, and the Chinese could agree to it. That is the biggest question mark, but it's also the biggest concern when it comes to the Chinese now.
All right, Bloomberg's Maria Tadeo in Madrid. Thank you so much for joining us. Such a pro working through some of that construction noise. Now let's get back to the markets and take a look at some stocks moving in pre-market trading here in the U.S. A number of them moving lower today are tied to the fact that we are seeing some pretty big losses now for Bitcoin. It just dropped back below that $19,000 level, already on pace for its worst quarter going all the way back to 2011. And that has weighed heavily on crypto-related equities and continues to do so. Coinbase is down 80% already in the first half, and on this final trading day, Yesterday, of that half, it's down another 5% in pre-market trading. You also have big tech stocks moving lower. Those are kind of what is creating a drag on the market as a whole. One of them being Apple, which is down the better part of 2 percentage points. But one upside mover to point out is Spirit Airlines. Yes, we are still watching this saga over who is actually going to get to buy this company. Will it be JetBlue or Frontier? They both have raised their offers for the company in recent days. There was supposed to be a vote today on Frontier's takeover offer by shareholders, but Spirit postponing that again, saying they just need more time to talk to both of these parties. Spirit is up about 2.5% before the bell, Anna.
Yeah, there's more to talk about in aviation then, Kailey, than just the disruption and the turmoil, but there's plenty of that as well. Now, coming up on the programme, John Bilton, JPMorgan Asset Management, head of global multi-asset strategy, will get his latest thoughts on where the markets head into the second half of this year and the $8 billion Bitcoin heist gone wrong. More on our big take story. That's ahead. Plus, a hard border in Ireland is out of the question. We spoke with the EU's chief Brexit negotiator.
I would not even consider these possibilities because this is definitely not in the cards. We are very clear with that with our Irish friends. I think that was a huge point of preoccupation in the United States. I mean, I had a lot of meetings with the senators and congressmen in the White House, and we, under no circumstances, should put the gains of the peace process under question marks.
This June, in honor of Pride Month and Juneteenth, Bloomberg brings you a special equality series every Thursday in June at 1 p.m. Eastern. Bloomberg Equality, celebrating inclusion this Pride Month and all year long.
Welcome to Bloomberg Surveillance Early Edition. We are simulcast on both Bloomberg Radio and Bloomberg Television. I'm Matt Miller here in New York with Kailey Leinz, Anna Edwards with us out of London. I'm looking at inflation data surprises higher and economic data surprises lower right now. This is what central banks are having to deal with, and requiem apparently means death mass. That's why yesterday's stories headlines were all requiem for inflation. Justina Lee, Bloomberg Markets reporter, joins us now. Can they do it, Justina, without driving the economy into a tailspin?
Yeah, I mean, that really is the question that everyone's grappling with right now. And the answer from markets seems to be that maybe not, because we're actually starting to see a lot of the big inflation traits roll over. You know, commodity prices have started coming down. Break-evens, which are these like market indicators of inflation expectations, have also started coming down. But at the same time, we're seeing analysts cutting profit estimates, and a lot of bond traders even starting to price in a rate cut for next year. And that is a sure sign that people are getting worried about recession here.
I mean, does that have to be, once we've seen inflation peak, Justina, does it have to be that sort of linear progress from one theme to the next? Because timing or working out when inflation has peaked globally may be a little complicated. Even in Europe, we've got some quite conflicting signs just this week.
Yeah, exactly. And if, you know, based on what we've been hearing from central bankers this week, they're not changing that narrative yet. I mean, we've heard kind of these few days that they're still talking about that regime shift from years of low inflation to possibly a completely different environment, you know, with like less globalization and kind of the war in Ukraine ongoing. And so it seems like they're still worried about that fight. And I guess the question is also, are we going to be in this period where, you know, stagflationary risk is going to be the headline one?
Justina, as it is the last day of the first half, I'm taking a look at the superlatives. It's the biggest first half decline for the NASDAQ 100 since 2002, for the S&P 500 since 1970, for the MSCI World Index on record. It has been brutal. How much optimism or pessimism is there as we head into the second half?
Yeah, I think people are clearly still quite wary because this is an environment we have not dealt with for years. And on one hand, you kind of have interest rates going up, and on the other, growth expectations kind of coming down as well. And I think it's been particularly acute because for years, you know, a lot of market darlings were trading at very high valuations. Of course, that's everyone's favorite tech stocks, but that kind of clearly was very much dependent on a low rate regime, and clearly that's kind of over now.
Justina, thanks very much. Bloomberg's Justina Lee with the latest on the markets. And for more market analysis, check out MLIV Go on your terminal. That is where you will find the Markets Live blog. This is Bloomberg.
This is Bloomberg Surveillance Early Edition. I'm Kailey Leinz with Matt Miller in New York and Anna Edwards in London. Now keeping you up to date with news from around the world, here's the first word. Senate Democrats are working on shrinking the tax increases in President Biden's economic package. Bloomberg has learned it's part of a bid to cut a deal with Senator Joe Manchin and get the legislation passed. The changes could mean that both U.S. corporations and wealthy households end up facing smaller tax hikes. Congresswoman Liz Cheney has warned her fellow Republicans that they must choose between former President Trump or the Constitution. She says they cannot be loyal to both. In a speech in California, Cheney called the former president a domestic threat the country has never faced before. She is vice chair of the committee that's investigating the attack on the Capitol. In Texas, 4 men have been arrested in connection with the deaths of 53 migrants smuggled to the U.S. from Mexico in a sweltering tractor trailer. All of the victims were believed to have been in the U.S. illegally, most of them coming from Mexico or Central America. 2 of the suspects were arrested on migrant smuggling charges, and the other 2 are being held on gun charges. And the European Union's chief Brexit negotiator suggests he won't contemplate a hard border on the island of Ireland. Maro Sefcovic spoke with Bloomberg's London office. He also said that the UK's plan to override the part of the Brexit deal governing trade in Northern Ireland may hurt European cooperation with Britain on financial services. Coming up, we may talk Brexit, but more likely we'll talk about inflation and the outlook for the second half. John Bilton, JPMorgan Asset Management Global Head of Multi-Asset Strategy, will be joining us. This is Bloomberg.
This is Bloomberg Surveillance Early Edition. Here's what you need to know. The first half of the year is ending with European stocks and US futures falling. Central bankers around the world are again warning that inflation is here to stay. China's Xi Jinping returns to Hong Kong and declares the city has been reborn from the ashes. It's an apparent reference to the sweeping security law that crushed dissent there. And it's one of the biggest changes to NATO's defense planning in decades. The alliance will boost the size of its high readiness force almost 7-fold as it keeps an eye on Russia. I'm Anna Edwards in London with Matt Miller and Kailey Leinz over in New York. And Matt, still a few hours to go until the start of US trading. European trading very much entrenched in a negative mindset. Recession fears to the fore.
Yeah, absolutely. Basically after Sintra, when all the central bankers told us they are going to fight inflation and worry less about a recession that those higher interest rates could push us into. So we're looking at the same thing here in the U.S. Futures are now down 1.5% right now, and investors are buying U.S. 10-year debt, pushing the yield down to 3.05%. I also think that when you hear, although it was fairly celebratory mood in Madrid, when you hear that NATO is putting 300,000 troops on high alert, that's not necessarily a great sign geopolitically, so I can understand that futures are down. Here we see wheat futures down in Chicago, just about 0.4%. But this is interesting because we are hearing reports that Russian troops have withdrawn from Snake Island, which sounds so ominous. But basically, it's a port where grains are shipped out of Ukraine, which is, of course, considered the breadbasket of the East, or maybe the breadbasket of the world in a sense. And that's why you see wheat futures coming back down. Wheat falling. Bitcoin also down 6% from midnight, and right now under $19,000. I think it's really interesting to watch this huge drop that we've seen this quarter because it's 58% down from the beginning. But it's important to point out that it's the biggest drop since 2011 when Bitcoin went from $16 to $5. So, that's just 11 years ago we were looking at $16 as a really high number. Now it's come down to a low of $18,964. Kailey, what do you see in terms of the pre-market movers?
Well, Matt, what I really want to do is make fun of you for how hard you are trying to pronounce the H in wheat. But that move in Bitcoin is really what's capturing my attention because as we drop below that $19,000 level, it's taking crypto-related equities down with it. The likes of MicroStrategy, which of course holds a lot of Bitcoin on its balance sheet, is down 10%. It's already down by about 67% so far this year. And for Coinbase, as we know, it's down about 80% so far this year. It's down another 5.5% or so this morning. And in addition to some of those crypto-tied stocks, basically all of the technology stock complex is lower in early hours as the recession fears are really at the fore, dragging markets lower as a whole. Tesla is down 2.5%. You also have Microsoft down by about 2 percentage points, Anna.
Firmly in the red here in Europe then, Kailey. We have European equity markets down by more than 2% in some cases. European stocks, of course, just like many other parts of the world. But here in Europe, the first half of the year has been tough. Europe having the worst half year since 2008 puts it in context, really, when we're looking back to the financial crisis for our comparisons. That's what we see on stocks. Let me show you what's going on in Europe in terms of other assets. And we have the 5-year French yield in focus. I could have picked others in the European space. In keeping with the Treasury picture that we're seeing, we've got buying of bonds taking place, yields dropping, and so a little bit of trying to find that perceived safety of government debt. Uniper is in focus as well. This is a German utility company, and we have this on the board today because this German utility company has confirmed it is in bailout talks with the German government. As a result, we see that stock is down by 16%. Let's get back to the market conversation, and joining us now on set is John Bilton, Head of Global Multi-Asset Strategy at JPMorgan Asset Management. So, John, really nice to have you with us. We've just been through the gloom of what was the European stocks picture in the first half of this year. Do you anticipate anything better in the second half, or is the second half when some of those earnings estimates start to reflect broader macro concerns that seem to be in the markets?
Sadly, I wish I could say, you know what, it's going to get better from here. But, and I'm structurally, relatively bullish most of the time. But this is a time when I just can't bring myself to be. I'm looking at earnings growth in particular. I'm looking at earnings which globally are still, expected to grow by 10% this year, at a time when margins are beginning to see the squeeze. We had some signs of that in things like the consumer staples in the last earnings season. And I think as we start to go through this earnings season, backward-looking numbers may be just fine. But don't expect much out of guidance, because which corporate executive is going to say this is okay?
Yeah.
They are probably going to cite labour costs, commodity costs, supply chain issues, and I expect you will see numbers come down. The problem we have, of course, is with rates going up, it's much, much harder for valuations to do the job of absorbing those earnings.
So that doesn't sound good for equities. Where does that leave credit? I know that you prefer credit to equity at this point, but I was just looking at the iTraxx, the crossover index, measure of the cost of insuring yourself against default in European companies, and that's on the rise to levels we haven't seen since the early days of the pandemic, which again sounds a little worrying.
This is right. Well, I think you've got to take your time horizon into view here, because I think what's interesting at the moment is that the balance sheets for corporations are actually in reasonably good shape. They've done a lot of their refinancing. Remember back in March 2020 when the Fed told us we're going to take care of buying corporate credit. Corporates rushed out and they termed out their borrowing. So their balance sheets are in remarkably good shape. Now, it won't stop the short-term risk that spreads widen as equities go down. But if you can sit through that, there's every likelihood that a lot of the corporate credit world will be money good. Default's relatively low over a longer period of time. So probably a bit too early to be, signalling a big green light on credit, but certainly it looks a better asset than equities in our view, because it's about balance sheet strength, whereas equities are going to suffer from that income statement problem.
So the 60-40 portfolio, even as we look at the worst quarter for that portfolio since 1988, you expect that to be the right formula to stick to?
Well, I think what's been very interesting is a lot of the drawdown that we've seen in a 60-40, and it has been a rapid drawdown, as you rightly mentioned. That's come because bonds and stocks have been correlated. Inflation has been surprising to the upside, and generally that means that both assets have gone down together. Back in 2008, when we saw a big drawdown in 60-40s, bonds gave some protection. This time, they've been in on the action, adding to the pain from the equity side. As we move more towards growth being in focus and inflation starts to cool, and there are some signs that it's beginning to level off, notwithstanding Spain's print yesterday, as we start to focus more on growth and less on inflation, those correlations start to work more negatively, so bonds should offer some protection.
Well, John, as you talk about inflation cooling off a bit, and obviously aggressive monetary policy should in theory have a role in that, I'm wondering how short you expect this hiking cycle to be for global central banks, and how quickly thereafter you're assuming cuts will follow.
Well, look, let's see where we land first. I mean, we're expecting to see Fed funds somewhere around 3 3/4 by the first half of next year. So this is a rapid hiking cycle. We saw the Riksbank get in on the action, 50 bips. We've got, the Bank of England, the ECB, all talking about the possibility of going 50. So certainly, I think that the prescient problem for central banks remains inflation, and they will keep hiking. Let's look at where we stand at the moment. Rates are still low by any objective measure.
John,
we do expect to see them move quickly.
I want to just get back quickly as we enter earnings season to forward estimates. Analysts have completely failed us. Where do you look for a good picture of how earnings season is going to pan out?
Well, I think what we've got to look at first and foremost is that when earnings come through, you have to go on the data that you have. Revenue data are probably fairly good. I mean, we don't have a nominal growth problem. When you put real real growth and inflation together, actually revenues should do fine. The question mark has been margins. And what we've heard from companies and what we've seen is that margins actually have held up incredibly well. It's only really now that we're beginning to see that pressure come in. So when we think about where to be looking, we would be expecting to see a classical, more defensive rotation. We would expect to be seeing, the healthcare sector, sectors like utilities begin to get a little bit of support. Typical risk-off moves. But what we'd also be looking for on any level would be those firms that have pricing power and their costs much more in control, because that's going to matter as margins come in focus.
John, thank you. I think there was a little bit of defence of the analyst in there. I was one for a while, so I feel the need to add the counter to Matt's point there. John Bilton, thank you very much for joining us. JPMorgan Asset Management with us on set here in London. Now, coming up live from the NATO summit, we will hear from the Spanish Foreign Minister. We'll get to that conversation shortly. This is Bloomberg.
This is Bloomberg Surveillance Early Edition. You're looking live at the principal room. Coming up later today, Evercore Vice Chairman Ed Hyman. This is Bloomberg.
This is Bloomberg Surveillance Early Edition. I'm Anna Edwards in London with Matt Miller and Kailey Leinz in New York. Let's get back to the NATO summit in Madrid, where Bloomberg's Anne-Marie Hordern is standing by for an interview with the Spanish Foreign Minister. Anne-Marie.
Thanks so much, Anna. Yeah, that's right. I'm standing by with the host country foreign minister, José Manuel Albares. Thank you so much, Ministro, for having us here and for having us on Bloomberg Television. Tell us, you're the host country. Would you deem this a very successful NATO summit?
It is a historical summit, genuinely historical. We always say that summits are historical. But the fact that we have put in place a new strategic concept that gives a firm answer to Russia and to the threats in the eastern flank, that the southern flank has been introduced, and we are looking towards the south, that Finland and Sweden have started the way to accede to NATO here in Madrid, makes that we are taking the first decision for a new security order of Europe and our transatlantic allies.
I was just in Bavaria as well, and what you hear from leaders, as I've just heard from you, is that there is a big sense of unity. But what is the fear that all these economic pressures domestically could fracture that unity that you have in face of Vladimir Putin?
We have to acknowledge that our citizens are suffering because of Putin's war, and that inflation...
10% in Spain.
Absolutely. Food crisis around the world, all that is hitting our citizens. It's hitting Spanish citizens. That's why in Spain, last Saturday, the Council of Ministers, we approved a whole bunch of measures to protect our citizens. But unity is the best way to cope with all these problems that are the spillover of Putin's war. And I can guarantee one thing to the Spanish citizens, to the European citizens: if we would have faced this war with unity as we are doing it, the cost would have been larger, because the instability of war being in Europe, it's unaffordable.
With war being in Europe, has this changed how Spain thinks of their defense spending? There's always been this European way of thinking at times of the U.S. would always come to our defense. But now you have a war on your doorstep of the European Union. Will Spain hit their 2% target?
Our commitment to the 2% target is total, but it's true. There is a public awareness. There is a public awareness that it's not because you reject wars that wars don't come to look for you, and that you have to prepare for military threats, but also for hybrid threats. In the southern flank also, we have pressing issues that can threaten our sovereignty and our territorial integrity, and therefore the investment in military is investment in the Spanish security.
President Zelensky says that he wants the war to end by the end of the year. Many think this is now just turning into a war of attrition. What are you hearing in terms of your partners, in terms of a peace negotiation, are more willing to almost force the Ukrainians to give something up to bring this war to an end?
Let me clarify one thing first. No one has wanted this war except Vladimir Putin. Neither President Zelensky nor Ukraine, nor European Union nor NATO. We have always been in favor of diplomacy, dialogue, negotiation. So we are ready for that, but unfortunately, I don't feel Vladimir Putin to agree with us on what could be the basis for this negotiation. Ukraine is a sovereign country, free and sovereign country. President Zelensky is the president of a democratic elected government, and therefore it's up to them, up to the Ukrainians, to take their sovereign decisions on how they want to do it. My personal feeling, we are still far from a negotiation because one part, Vladimir Putin, doesn't want it.
What about the Leopard tanks? Are you still sending them to Germany?
I don't like to talk about specific military equipment. I think that the best way to help Ukraine to fight for their own sovereignty and territorial integrity, and the best way to defend those civilians, it's not to talk about which equipment, how much, where it's entering for.
But this is getting a lot of attention, though, because the Germans need to okay it. Have you gotten a signal from your colleague, Annalena Baerbock, that you'd be able to get these tanks through?
What I can tell you is that Spain's commitment to help Ukraine to keep their own sovereignty and territorial integrity is total, and we will continue supporting them.
So it sounds like potentially those tanks could be rolling over soon. Ministro, thank you so much for your time. The host country of the NATO summit, and he's right, it was a historic one. Many officials will say every summit is historic, but this one specifically, as you have Finland and Sweden coming into the fold. Anna?
Anne-Marie, thanks very much. Bloomberg's Anne-Marie Horden and the Spanish foreign minister joining us there, as she said, the host nation from Madrid. Coming up on this programme, the $8 billion Bitcoin heist gone wrong. More on our big take story next. This is Bloomberg.
This is Bloomberg Surveillance Early Edition. I'm Kailey Leinz with Matt Miller in New York and Anna Edwards in London. Now we want to keep you up to date with a few news from around the world of cryptocurrencies, a few of those news items that we are following, including the current phase of deleveraging in cryptocurrencies may be over because it's at an advanced state and it might not last that much longer. That's according to JPMorgan. Strategists there arguing multiple crypto company failures shouldn't be surprising, given huge price declines among tokens. Grayscale says it's suing the U.S. Securities and Exchange Commission after its application to convert its Bitcoin trust into an ETF was rejected. In a meeting with the SEC last month, Grayscale argued the plan would unlock as much as $8 billion in value for investors, but the regulator found the proposal didn't do enough to prevent fraud and manipulation. And finally, CoinDesk reports that crypto lender Genesis Trading is looking at a potential loss running into the hundreds of millions of dollars. The report found that the losses at the top digital asset lender are at least partially due to its exposure to Three Arrows Capital and Babel Finance. And as we know, Matt, there's been a lot of pain. Those are just two companies or firms that have felt the fallout.
Yeah, a couple of analysts now saying that we could see Bitcoin fall to, I think, $12,000 or $13,000. That's the lowest target I've heard in a long time. But I will repeat, as I have been saying, Kailey, last time we had such a bad quarter, it went from $16 to $5. So even $12,000 wouldn't be that bad if you got in 2011. Let's get to one of the biggest heists in history. In fact, maybe the biggest heist in history, although they didn't really get away with the money. Novelty rapper Razzle Khan and her startup guy husband are now facing trial for the $8 billion Bitfinex hack, but some of the proceeds still haven't been recovered. That's the subject of today's Big Take. Bloomberg's Zeke Fox wrote the story for us, and he joins us now. And Zeke, it's a huge hack, and it's made the story even sexier by the horrible music videos that this couple made. But they didn't get away with the money, right? They weren't really living the good life.
Yes, so this hack's been a mystery since 2016, when Bitfinex, one of the world's biggest cryptocurrency exchanges at the time, got hacked and had more than half of their Bitcoin stolen. And only this year did we find out who allegedly was involved. And it was this couple, Ilya Lichtenstein and Heather Morgan, who lived in the financial district downtown. And Heather had a series of extravagantly bad music videos under the name Razzle Khan. And yeah, they seem to be doing pretty well, but they weren't living like someone who was sitting on billions of dollars of Bitcoins. And the reason is that,
because it's incredibly hard to then use the stolen Bitcoin when they know where it is. They just don't know who it actually, what wallet that actually belonged to.
Yeah, essentially, when Bitcoins exist as addresses on the blockchain, and once Bitfinex realized it had been hacked, they were able to see where the hackers sent the Bitcoins, and they published those addresses. So for years, anybody could look up these addresses and see where the Bitcoins were. It was sort of like setting off a die pack in a bag of stolen cash, because nobody wants to handle Bitcoins that they know come from a hack.
How did they get caught then, Zeke?
So they obviously, you steal money, you want to figure out how to spend it. And it appears that they had one idea, which was to send some of the stolen Bitcoins to Alpha Bay, which was a darknet market where you could order drugs like it was eBay or something like that. And Alpha Bay was willing to accept deposits of dirty Bitcoins. And then once you withdraw your money from Alpha Bay, the link on the blockchain is sort of broken. Anyone who looks at your new address coming from Alpha Bay can't necessarily link it back to the hack. The problem was that, maybe a little unsurprisingly, law enforcement was onto Alpha Bay. They didn't want to let this, online drug market run. And once Alpha Bay got busted, it appears that the authorities were able to make the connection from the deposit of the hacked funds to Alpha Bay to new accounts on the other side, and then to this couple.
All right, Zeke, just quickly, we only have 30 seconds left. What was your favorite Razzle Khan rap lyric that you came across? Razzle Khan, Razzle Khan.
I have to say, I was impressed by her. It's either an amazing coincidence or like crazy audacity. She even raps about her hacking skills. There's one where she says, "Spearfish your password, all your funds transferred."
It's amazing. I really encourage everyone to go read Zeke's story, because the story in and of itself is great, but some of those lyrics just add so much color, and they really are so wild. Bloomberg Zeke Fox, thank you so much. And of course, you can find his story on NI Big Take on the Bloomberg or on Bloomberg.com. Plus, you can hear more about crypto in general every Tuesday, 1 p.m. New York time, 6 p.m. in London. Matt and I host Bloomberg Crypto. That's it for Early Edition. More surveillance is ahead with Tom, John, and Lisa. This is Bloomberg.